Welcome to the Nick Finance Clips channel, guys, and if you're wondering what stocks to buy in the year 2022, this just might be the video for you. Now, we have a portfolio that has beaten the S&P 500 over the last 20 years, and in this video I'll be sharing with you guys what stocks I'm looking at for the year 2022. Before we get in, guys, if you don't mind, please hit the like button and subscribe to the channel so we can share the video with much more people and you can also support the channel. Now, guys, it's clear that Warren Buffett's portfolio has outperformed the S&P 500 over the last 20 years. In the short term, there might have been challenges here and there, but overall, it's a stellar performance. Now, before you is the last filing from Warren Buffett, the Q3 2021 filing, which shows equities worth $310 billion and cash worth $163 billion. Okay, now the video will talk about the top 5 stocks in Warren Buffett's portfolio, and I'll tell you why I think these plays might still be interesting picks for the coming year. This footnote gives an allusion to what I'm about to talk about. Approximately 70% of the aggregate fair value was concentrated in 4 companies: American Express, Apple, Bank of America, and the Coca-Cola company. But this list is much more comprehensive that shows everything. If you're interested, I'll leave a link in the description so you can go through all the companies in Warren Buffett's portfolio. With that said, let's start out with the first company on this list, which is Apple. Okay, Apple needs no introduction. Most of us use Apple devices, and we know that Apple is definitely one company that is strong. Apple pays a dividend yield of 0.59% and has a gargantuan market cap of $2.43 trillion. From a fundamental standpoint, Apple continues to grow its revenue. We can see a 28.84% change in revenue over the last year. And guys, Apple continues to innovate. So I would expect that this company will do very well, much better, even in the long term. The last 5 years have seen Apple return a whopping 445% gain, and yet to date, Apple has given its shareholders nearly 16% despite the market vagaries. Several analysts have their consensus view on tip ranks and shows that 27 analysts have looked at Apple and 21 are calling it a buy, with 6 recommending a hold and no analysts saying Apple is a sell. Now that translates to a price of $170 on average, which speaks to a 13% upside for the next 12 months. So by and large, analysts are seeing a 13% upside in Apple from current prices, and I will tend not to deviate from that expectation. So for Apple, I still think it's a strong company, a $2 trillion company. Might not grow as fast as some other companies, but definitely should be a good addition to the portfolio for that stability and decent growth over time. Bear in mind again, like I said, that this is the largest position in Warren Buffett's portfolio with $136 billion invested. The next stock we have to talk about right now, the number 2, is Bank of America. Bank of America pays a pretty dividend of 1.77% and has a price to earnings ratio of 14, which speaks about the company being somewhat cheap in a context. With a market cap of $383 billion, this is clearly one of the largest banks in the world. It's very important to see the trend in the revenue growth of this bank. You can see $87 billion growing to $91 billion, but that was slowed down by the pandemic and it stopped at $86 billion. But guys, we can see a recovery back to $88 billion. The net income is also pretty decent, with $16 billion in 2017 growing to $28 billion as of the trailing 12 months of 2021. So what we're seeing is that the bank has definitely been hit by the pandemic, but is cycling out pretty good. 16 analysts have rated the bank, with 11 rating it a buy and 4 rating it a hold and 1 a sell, implying a $48 average price with a 2% upside, which is pretty small for a 12-month price target. One other thing to note is the fact that in 2022, the Fed might likely increase rates, and that generally tends to be positive for banks, being that their interest income will generally increase. So you might want to keep a close tab on Bank of America for inclusion in your portfolio, subject to your own due diligence. Coca-Cola comes in as the 3rd company that should definitely be on your watch list for 2022. Now, this company pays a 2.97% dividends Coke needs no introduction. It's a $244 billion market cap company that has seen a very decent growth over the last couple of years. When you look at the fundamentals of Coca-Cola, you would not see a massive galloping growth, but you will see that steady, consistent growth somewhat. The cash pile is relatively flat at 11 billion, but we continue to see growth in turnover over time. Out of 8 analysts that rank Coca-Cola, 5 are a buy and 3 a hold with no sell rating on Coca-Cola, coming to an average price of $61.50, implying an 8.64% upside over the next 12 months. Now, this is not one of those companies that will grow your portfolio massively like a tech stock. However, this is one of those defensive stocks that just might hold the weather, hold the grounds down when the market decides to turn. For instance, check out the range of Coca-Cola's prices. $48 to $57. You don't see that massive drop to say $22 or thereabout with a stock like Coca-Cola. It tends to be a very good defensive stock when the fortunes of the stock market turns around. So this is one stock that could be a good dividend play and at the same time one of those defensive stocks. Number 4 on our list is American Express, which is, guys, a card company that operates all around the world. Virtually every one of us would have heard about or used the services of American Express. Now, what's the attraction to American Express by Warren Buffett? Check out number 1, the company pays a dividend of 0.95%. From a valuation standpoint, the company is trading at a price to earning ratio of 19, which is pretty cheap, and it's quite a large company at $140 billion market cap. The financials of the company shows that the revenue has seen a consistent growth from 2017 to 2019. However, there was a dip in 2020 and there has been a massive pickup thereafter, $40 billion of revenue. From an earnings standpoint, we see a similar pattern growing from 2.6 billion to 6 billion pre-pandemic, dropping to 3 billion in pandemic year and surging to 7.7 billion post-pandemic. This is one of those stocks that are very well recovered from the whole illness situation. A good point to note also is that American Express's dividend is quite decent because the payout ratio sitting at 22% leaves a lot of room for upsides. We don't see a lot of shorting in American Express shares because perhaps the short sellers see this company as quite a fairly good play. 12 analysts have put out a recommendation on American Express with 7 hold recommendations, 4 buy recommendations, and 1 sell recommendation, an average price target of $180, implying a 1% downside over the next 12 months. Now, guys, this is one of those stocks that needs to be on your watch list should there be a pullback in the market. We've seen how the company nicely recovered from the whole illness situation, and if there's a pullback in this stock, it just might be one of the ones to include in your portfolio next year, subject to, of course, your due diligence. The last stock we're going to be talking about, the number 5, is Kraft Heinz company. Guys, this is a stock that has a market cap of $45 billion, but the main attraction remains the high dividend yield of 4.3%. The company came out of the merger of Kraft Food and Heinz a couple of years back, and Warren Buffett seized a sizable stake in this company. Now, from a performance standpoint, this company has not done well over the years. We can see a 54.9% drop over the last 5 years, which is pretty abysmal. In fact, when you check out the rankings by analysts, there's no buy rating right here, 6 hold ratings and no sell rating, with an average price of $39.67, which implies a 7% upside for the next 12 months. Now, this is one of those stocks that I would tag a recovery stock. It is not a stock like Apple that we can see has strong fundamentals in terms of revenues, cash flows, and innovations. It is one of those stocks that are coming from the trenches that have a possibility of being turned around and could result in massive returns if that turnaround story plays out well. However, the fact that Warren Buffett still holds on to this position despite seeing how the fundamentals are gives me some questions. Number 1, is he in it just for the dividend, or is he in it because he sees something that we on the outside cannot see? Be that as it may, this should also be on your watch list for a possible inclusion subject to your due diligence and how the market plays out. Wrapping up, this is a list of all the companies on Warren Buffett's portfolio as it stands right now, with the top 5 being discussed very quickly in this video. If you would like me to do an in-depth due diligence on each of these companies and present on this channel, let me know in the comment section. With that said, guys, and just in case you forgot to, please hit the like button again and subscribe to the channel. I post videos on this channel relating to Warren Buffett's moves and other things that he has said that should help the investment community. With that said, thank you so much for watching. Have a splendid Yuletide season and see you all in the next video.